Welcome back to Ferocious Education. This is Ed. Today I'm going to be talking about GPOR, Gulfport Energy Corporation. I'm going to go through technical analysis, news, what I think about this company, financials, presentation, and give an insight toward everything that is going on with it right now and whether what is the most realistic approach to this stock. Now make sure to drop a like to this video to help the channel grow up, subscribe, leave notifications on, and feel free to share this video if you liked it. And let's jump right into it. So on a 1 week perspective, what we get to see here on the MACD is that it's actually attempting a positive reversal. Now with volume has been increasing, but for the wrong reasons. I mean, it did kind of recover just a tad coming into last week, but it did see a massive drop from almost 81 cents we were talking about all the way down to something like 40 cents. And so there has been massive dumping onto this. Stock is obviously oversold. And you get to see the ADX is being sloppy and the moving averages are bearish. And that is expected from this massive drop. So we're going to be doing a little bit of news and try to understand exactly what's going on here before we get to jump into conclusions from technical analysis. MACD looks like it's curving down, massive dumping levels, ADX shows in a negative trend, Williams percent are oversold, moving averages extremely bearish, but that's also because of different aspects such as people selling, panic selling for instance. Bottom of the moving average band is at 51, middle 57, top is 62, but you get to see the massive dump on unbalanced volume, and I'll discuss this a little bit more, but we're talking about the stochastic fast and slow. We get to see both. Well, for the slow it's actually curving a little bit on neutral level, a little bit down, but the fast one gives you an indication that might be actually a bit more of a pull-off. A pull-up coming in sometime soon. Now here is the chart, and you get to see went all the way from 388 all the way down towards March bottoms when we're talking about 35 cents, and it actually met that exact same support again. So technically it didn't create a new 52-week low, but it reiterated that one. So next, Fibonacci resistance at $1.18, above that $1.70. But it's time to ask ourselves, well, where are the support levels and resistance that we should be concerned about? So I'm going to be considering also back towards the left here, because that's an important one. So there's a significant resistance here at the 40-cent level. And that is really the next real resistance. And then beyond that, we're looking at 44 cents to 46 cents. After we break into that, we might actually see a nice jump. Above that, we're looking at 55 cents. That's another significant. Above that, we're looking all the way back to 63 cents. After the 63 cents, there is a bit of room to grow over there, but really, once we break the 78 cents / 76 cents, that's where you can start seeing real action. Now, what happened here was it was a nice jump, and then something hit related to bankruptcy 3 days ago. And it dropped the stock from 83 cents down to 35 cents. And if we were to talk about, well, how much is that roughly, we're looking at around something relating to, well, that can't be right, 100%. Well, probably, okay, well, chosen basically very much closer to 50%, going towards the negative side. But perfect. So we get to see that that's a massive drop, and now we got to ask ourselves, is this worth buying as a dip? So let's take a quick look into news, and then we're able to identify whether that might be the case or not. So quickly here, this is their website, Gulfport Energy. So you can go on, dive deeply into it, and try to see basically multiple things. I'm going to go start with the presentation because that usually gives me an insight. Now this one is in August, so it's only around a month, a bit more than a month old. And one of the things that I want to focus on is how much cash or how much money do they have access to for the time being. Now market capitalization, you're talking about 173 million. Enterprise value is $2.1 billion. I'm going to highlight the $2.1 billion because that's something to consider. Long-term net debt is 1.9 billion. So your difference on here coming in is $0.2 billion or $200 million. Liquidity around $256 million. So that is something to consider. And then I'm going to go back towards the 10Q here, just because I'm going to go back and forth here to compare, well, is a bankruptcy viable? Is it actually something that, they might just get out of it? Cash here they have is somewhere around 2 million, 2.8 million. Total assets, we're talking about 151 or 152 million. All right, so 152 million. We're talking about a total revenue of 132 million per the end of 3 months. We're talking about a net loss of $560. Now 561 if it comes in all, right? 561 million. That is insane. I mean, is this reported in thousands or? Yeah, in thousands except share data. So we're talking about $561 million. Comparing it to a liquidity of $256 million, an enterprise value of 2.1 billion, but 1.9 billion in debt. The net comes in terms of the value, comes in $200 million. Add that to the market capitalization, $300 million. Let's say 200 plus 256, talking barely 500. Still below the 561 million. That's with even a massive stretch. That's if you're talking about barely it being breaking even. Now, they did purchase $263 million aggregate principal amount of unsecured notes for $160 million, providing annual cash interest reduction of $11 million. So that's in the longer term, but it seems that they're actually moving on for longer term. Now, whether that is actually true or not, we need to consider what is the credit facility that they have. They have around $700 million coming in towards their credit. Now, they don't have enough cash, so that's only around $3 million. Talking about 700 million, so that comes in as 700 million. We're talking about a net of probably 200 million that goes on between the enterprise value and their loans, the debt. That is quite interesting. Now comes in towards, is this business probably going to increase or decrease? From what they say, or from what we see here, is that they're actually lowering down their costs. If they lower down their costs, their revenue might increase. Now, they did also do one thing, and I'm going to mention it in a little. So to find it here, I believe it's all the way down towards their next financial update. Right here. So, in terms of governance, for instance, they do have five joined the board in the last 3 years. 7 of 8 directors are independent. A lot of them hold enough shares, have the interest for the stock to not go bankrupt. Now, in the proxy, I haven't seen anything significant for us, but I would love to go through the highlights in terms of the company, in terms of coming in towards the last quarter results. But one thing to consider today, that capital management bought 7.66% of the company, and you're wondering, well, do they probably do a really dive into DD? They might have already looked into the financials. And why would someone buy company around 12.2 million shares if they think that is going to go under? That is something significant. Now, institutional buyers have been dumping this all month. Then you get one company here that really brings in and says, you know what, we're going to scoop 7.66%. Shows a little bit more confidence in the stock. Insiders are not selling either, so that's good news, but they're not buying either. One thing that really concerns me is the reverse split that is probably going to be imminent if this doesn't fix up its price. 180 days from September 21st, so they still have a bit of time left, right? So they got from September to October, that's a month. October to November, that's 2 months. So we already are just way below the 180 days, around 60, below 60. That's amazing. Coming on towards their quarter results, this is where one of the stuff concerns me here, is other than the capital expenditure, which is amazing, let's take a look here. During the second quarter of 2020, it incurred capital expenditures were around 54 million. Your total capital expenditures, including approximately 51.7 million of drilling, completion, DNC capital expenditures, and 2.3 million of land capital expenditures. So the total capital expenditures were around 189.3 million. Significant amount of that spent was mainly during to additional to their capital, so that is fine for me to see, but we still have a large amount between their enterprise value and their long-term loans. Next thing is, as a result of the current commodity price environments during the second quarter of 2020, they made a strategic decision to defer near-term products later in 2020, early 2021, where natural gases are in higher demand. It shows that they're pushing some things behind. That is interesting. And so let's build up onto the arguments for, yes, there's probably bankruptcy, to argument that no, they're going to come out of it. Okay? First things first. The bankruptcy argument, because it's already been floated out there, and you know, there's a little bit of a list to go to it. One, you're thinking about a stock that has right up here, you look at it, $2.1 billion in enterprise value, $1.9 million in total debt, liquidity is around $256 million. We're looking at market capitalization, $173 million, less than the market liquidity. And we're talking about, in terms of cash, barely any cash, and they're reporting losses of around $560 million, more than their entire liquidity. Puts them at low cash, so it's either a massive offering. That could be one of the kind of things that comes out of it, but let's go on towards bankruptcy. Bankruptcy arguments is almost zero cash. Well, 3 million is nothing compared to their debts of 1.9 billion. $561 million in losses, more than their actual revenue and more than market capitalization. Those alone are strong enough. Coming in towards the argument that no, they're going to come out of it. They can release a massive offering. 2. One of the companies just bought 7.66% of the company. That shows something. 3. They can still do a reverse split and still be listed on. That will drop the price a little, but they can do that. 4. They're planning ahead, and the 7 of their 8 board directors are independent, so that might mean that they're actually paid on and compensated by a lot of them by shares, which we saw in, I believe, one of the proposals, and so that gives them an incentive to keep the company ongoing. Now, what do I think is going to happen? So, bankruptcy plays have been on fire sometimes, especially recently. Remember Hertz and all that stuff. I think bankruptcy is almost priced in at 80 cents. It can probably go down to 20 cents, which is half what it is right now. And so you're almost betting with the odds. It's your decision to hear that argument of bankruptcy and the argument of not, try to weight them. Now, the argument of not has offering in place. That's a dangerous thing, because it's going to dip even more. So is this worth your play? Well, what if they don't do an offering? They just let it play. You might see this one bounce back if they don't declare bankruptcy because of the 7.66% institutional buyers. So it's your decision to make. Well, maybe you put $1,000 in here into 33 cents. This jumps back to 50 cents. You got $1,000. But if your portfolio is $1,000, I wouldn't put more than 10% in it. It's a risky play with high rewards. That is my view on it. What do you think about the sticker? Make sure to mention down in the comments below. Subscribe and like. You have a wonderful day.